Welcome to this video, Dave. What we're going to be looking at is a key problem that all traders face in terms of becoming successful Forex traders. And most traders simply cannot overcome this problem. What is it? Well, basically, it's holding winning trades and milking them for as much profit as possible, but also knowing when to quit the trade. Now, in terms of running profits, most traders just simply cannot do it. Why? Because there's a number of cognitive biases within us which work against us in terms of doing this. Okay, now I'm going to go through all the biases and all the problems and how you overcome them. I'm going to start with one of the most important biases. I'm just going to show you a very, very short clip. Watch how these people answer the question, and then you'll realize why most traders simply cannot hold profitable trades. It'll take about 45 seconds, then we'll be back to discuss.
We asked shoppers in a Chicago mall if they would prefer $100 in a year's time or $102 in a year and a day.
I'll take the $102 in a year and 1 day.
$102.
Year plus a day.
And then I can wait that extra day for the $102.
Yeah, for extra $2.
Yeah,
it really will make me a difference.
I would do the 102 a year and a day from today.
They all made the rational decision.
What's 1 day after a whole year of waiting?
And chose the larger amount. Then they were asked if they would prefer $100 today or $102 tomorrow. The larger amount is still the rational choice. So what did they say?
Oh, I'll take the $100 right now.
I would take $100 today.
I would prefer the $100 today.
Today.
I'm taking $100 today.
The desire for a quick reward
$100 today.
trumps their rational self-interest.
I will come back after that short clip there. Now you can see, when the money's a long way away, that day doesn't matter, does it? But when they can have the money right now, the day does matter. They make a myopic decision, too short term, and that basically overcomes what is the rational, logical thing to do. Now, all Forex traders suffer from this problem, even experienced Forex traders. I certainly do, and most of the people I know do. But you just got to overcome it. It's not easy to overcome it, but we're going to discuss how we do it. And in relation to this, I want to discuss a fantastic book, which I think any Forex trader should go and read. It's called The Art of Execution by Leo Freeman Soar. And what he was a hedge fund manager. He had, I think, 500 million, and he was basically giving it to a number of traders to invest for him. And what he did was he monitored them. And he actually found out that in terms of all the traders, there was one group, he classified them as connoisseurs, who were the really successful ones, okay? They were the ones who could run the big profits, okay, and not bank earning. Like Leo Freeman Soar says, it is not easy, but anyone can actually aspire to be a connoisseur. Now what I want to do is go through all the problems we face in terms of running profits and how to become a connoisseur trader. So let's just go through some key points in relation to doing this. Right, let's have a look at some problems in terms of running profits. Now, we've seen that we have that natural tendency to want to take a profit if it's in front of us. So I think in terms of this, when the trade first gets moving for a trader into profit, let's say only a minor profit, let's say 50 pips, 80 pips, 100 pips, something like that, traders suffer from risk aversion. Yeah, it's been proved that we are risk averse over wanting to make money. This has been proved by Daniel Kahneman with prospect theory. You can go and check it out. If you haven't, it's essential reading. We, above all else, do not want a profit to turn into a loss. That's just a sort of natural tendency within traders. So a little profit on the board, there's a little fluctuation against it, it's snatched, it's taken in. Okay. Personally, I find this quite easy to overcome because there's no point in taking a 50, 80, 100 pip profits when obviously you've got a risk over 100 pips in the Forex markets, just to give the trade room to breathe. So you soon learn that this is not the right thing to do. I think the real problem comes when the profit gets bigger. Frustration. We've all had it. You get a trade, comes on, goes into profit, 50, 100, 200 pips, maybe a little bit more. Then you get a reaction against you. Then it goes up and you get excited. It comes back down, a little bit of a bigger retracement. You start to get frustrated and it chops, okay? Sideways. Well, this is just consolidation. You're always going to get consolidation within big moves. You've got to have your stop back far enough so you can ride out the consolidation period and basically be patient. You've got to overcome the frustration. Most traders can't. They've got a decent profit. They'll bank it in. We all suffer from recency bias. You can tell with those traders earlier on, not traders, people in the shopping mall. Because the money is there for them now, they want it. It's recent. Okay, we have that with the news. And also when we look at price action. You're looking at prices and you see moves against you on a screen. They might not be that big, but they might appear big in the short time frame. You take a lot of notice of that. And again, that could panic you out of trade. I've always said, do not sit around looking at a price screen. It really is counterproductive. The desire to act, the desire to be busy. Okay. If you're doing a normal day job, it's good to be busy, good to be doing things. Not in Forex. You don't want to be doing too much. If you've got a good trade on, leave it. Okay, that's it. Just leave it. Unless there's a reason to come out, you stay with it. And I think as Jim Rogers said, traders always feel like they should be doing something. No, don't. Just leave it. Okay? The work ethic doesn't help you in Forex trading. Seeking the dopamine hit. This is just basically always there for us. Winning is good. Gives us a release of dopamine, which is obviously the pleasure hormone. And you've got to avoid wanting the dopamine hit. It's a bit like having a nicotine hit when you smoke cigarettes. It's not good for you. Responding to or wanting the dopamine hit also is not good for you. Leo Freeman saw as the connoisseurs. What he noticed about them? 60% of their trades were losing trades. The 40% they won on, though, they won really big. He also noticed they went for unloved trades, so the contrary trades, really. So in Forex trading, this will be trades where everyone thinks a currency is going down. You take the view that it's going up if there's good reason, looking for the turn, okay? So trades that not many people will be looking at. The connoisseurs liked to be in at the start of a move. Why? It's the lowest risk time to come into a trade, because other traders who are the other way round are going to get hit on stop. That's going to give you some profit. Then they might reverse round in the trend following phase and join you and propel the trend on even more. Okay, so it's the best risk reward basically for those turning points. Invest big. They didn't mess around with lots of trades. They just did one or two and sat on them. And it was Stanley Druckenmiller that said, your entry point is not as important as how much money you've got on the trade. And I firmly believe that. When people say, I made 100 pips on a trade or 500 or whatever, that is not in itself important. How much money, how much were you risking on the trade? Was it big enough? Okay. Connoisseurs always focused. They would stop themselves out. They had predetermined exit points, but they would basically just focus on the long term. He makes the point they have a high boredom threshold. That goes with the desire to act. Okay. You don't want to be doing anything. You have to have a high boredom threshold because, Forex trading should be boring. George Soros said that. Good investing is boring. Most of the time you are not doing anything, okay? It said the connoisseurs treated the trades like vintage wine. A wine or vintage wine gets better with age, okay? What he did say was what they would do to get over, having some reward is they'd uncork a few bottles now and again, but they would still keep, obviously cases of vintage wine in the cellar. That was the way he described how they did it, obviously taking partial profits. And I found when I started doing this, and I'm sure everyone who watches my videos, those I like to run multiple trades, so I could just bank some in. I'm still very confident in the trade going the way that I think it's going to go, but it just satisfies you and gets over the biases you feel if you take some in. Okay, it's just, for me, it's just so psychological. He also said, in terms of the connoisseurs, they were always looking for the fire exit door, which I'm going to explain in a moment. What I'm just going to do is give you a quick review of a trade that I was very, very confident in terms of its profit potential. But when I'm in the trade, it's very, very difficult to hold. And I'm just going to go through it. I'm going to go through how to run multiple positions, and also want to go through why that analogy with the fire exit door is so important. Right, let's shift to a chart of GBP. NZD dollar daily chart. What we're going to do is just look at a trade that's really interested us since the summer. It still interests us, and how we've played it and tried to be connoisseurs, as Leo Storr put it. Probably not as good as the guys he had, but hey, we try our best. Right, now, in terms of British pound, New Zealand dollar, to say it was an unloved trade in the summer would be an understatement. And what we noticed here, when these candles start to find support into this bunch of candles here, we see an accumulation of commercial buying, a lot of it. Smart money commercials and the COT net traders positions are going heavily long. Speculators are going heavily short. At the time, the media was all doom and gloom about Brexit. Okay, the economy is going to collapse in the UK. Everyone's going to be living in caves, all that sort of stuff. We always said at the time, complete nonsense. We had a huge decline in the British pound and no change in the British economy. Now, in terms of the accumulation by the commercials, that's making us bullish. So we're going to put in a couple of trades. We always run 2 trades, so we can take one off to basically give us our dopamine hit and still stay with the trade. And as you can see, we go up a little bit, come back, then we start to snake down with a bearish bias, really. But what we notice into this level here is the commercials step up their buying again, and the speculators are really going against them. You've got these 2 little candles, low volatility. We get really small candles. You normally expect a big move. Obviously, we think it's going to be up. Now, this is where you can pick certain trades to load up even more. And this one we're going to load more onto. And we decide to put in another trade on a breakout from the triangle and a move above the 20-day. And it's this candle here. Then we move off to the upside. Now, this is where the cinema analogy comes in. Leo Sawyer, it makes a really good contrast. He said, imagine going into a cinema. There's a few people there watching a film called Japanese Yen, for example. It's just an analogy, so it could be anything. And you basically shout fire, okay? Only a few people in the theatre. They're going to look around and then just basically make their way to the fire exits in an orderly fashion, okay? Now, imagine if the film was really, really popular, every seat was filled, and you come in and you shout fire. Then people are not going to act in such an orderly fashion, are they? They're all going to scramble and try and get to the fire escapes doors first and not be the last one out. And that's what you kind of get here. All the shorts, okay, are basically going to scramble to get out. There's too many of them, okay? So you get this big move up here. Now, from our perspective, we put the extra third trade in, okay, and we take it out at 182, okay? Now we still think, the pound is going higher, but it's a profit. It's a big profit, taking it out. Okay, still left 2 trades in, but we've had a little bit of wine from the cellar, as Leo Saur says, and now we're going to hold. Now we get some frustration. Okay, comes up, back. Oh, she's going up, getting excited. Comes back, goes up, comes back, drifts back. So this period, consolidation, it's frustration. Okay, you've got to be a trader who can handle frustration. Otherwise, you can never hold the big trades. Let's face it, any big trend is going to have a 200, 300 pip retracement in it at some point. You just got to hold, basically believe in your trade. If everything is looking good from your perspective, and the commercial's still very, very long, speculator's still pretty short. So we've held, then she breaks up again. Now I think speculators are starting to come in long as well, helping the trade out. When we get up here and drift back, 50% of our trade goes out. Okay, so again, helping us stay with the trade. Then she goes up. I personally thought she was going to go on. She didn't. We get stopped out. Okay, but if we take this trade, it was a really good one. We managed to clear 1,000 pips out of it effectively. But it's not the number of pips. I've said it's how the trade was weighted, the amount of money on it that made it a really big money earner for us. Okay, 2 big candles down. She comes, bangs into the 20-day moving average. Okay, that's a buy for us. Goes up, comes back to the 20. The fact that she came back through the 20 and came back up again, for us, is giving us the idea we should load this trade up with an extra trade, because it's just held, support of 188, and now we come back through the 20 again. We'll have another trade in. We did it, take it out at 192, still leave 2 trades running. And then what happens? She comes down, and this is really frustrating. She clips our stop on that tail, okay? And then look what she does. After clipping us, 191 to 197, okay? 600 odd pips, isn't it? Just so frustrating. But that's what Forex trading is. Now, it is actually tempting to just come back in, okay? But for me, the trade has become too crowded, okay? There's too many longs in there now. And I think, they're probably going to have to go for the fire exit. And that will give us an opportunity on the dip. It's still very, very bullish of this one. It's been, a really good trade. You can see what you have to deal with. You've got the frustration in there, and then you've got to decide when to load up. But the good thing about when you're focused on a big trend, when you're taking money in all the time, reducing your exposure, getting some profit, make you feel good, it will help you stay with the big trades. And for us, the best or the lowest risk part of this trade was down here on the initial turn. Okay. When the trade becomes crowded, we get a bit weary, and it certainly is crowded now. I read an interesting story. I think it was I can't remember which book it was in now, but it was Sir Isaac Newton, one of the greatest thinkers of all time. He invested in the South Sea bubble. He was making a load of profit, banked out early, and then he sees the price going up again, so he decides to come back in and gets caught right on the turn, loses all his money. And he came up with that famous statement, which is, I can calculate the motion of heavenly bodies, but not the madness of people. Now, in terms of Forex trading, it is a probability game. We know that. And, anything can happen, okay? We need to go for those big trades with conviction. But yeah, it's very difficult to put on a trade and hold it. You need to be a bit of a connoisseur in the way you think, in my view, and really learn from the way they vary bet size, and they're always looking to see how full the cinema is. Right, that is the video for today. Thank you very much for watching me as usual. Take care. Have a good day.